So we all have insurance, right? But are we really as covered as we think we are? Today, we're going to dive into something called limited insurance. Now, no, it's not the most exciting topic in the financial world, but trust me, it plays an absolutely crucial role in protecting you from those surprise financial hits that can really sneak up on you.
I want you to take a second and really think about that. You pay your premium every month. You've got that insurance card tucked safely in your wallet, so you're all set, right? Well, the truth is, maybe not.
And this, right here, is the big problem we're talking about today. See, a major accident or a serious illness can unleash a tidal wave of costs that your main insurance policy was just never built to handle. We're talking about lost income, travel expenses for treatment, maybe even having to modify your home. These are what we call coverage gaps, and they can be financially devastating.
So how in the world do you patch these holes in your financial safety net? Well, that's where limited insurance comes into the picture. The best way to think about it is like this. If your big health plan is your all-purpose multi-tool, a limited policy is like a specialized instrument, a surgical scalpel maybe, designed to do one very specific job perfectly.
Okay, so here's the official definition, and I really want you to focus on that one word, specific. These policies, they don't try to be everything to everyone. Nope. Instead, they kick in with benefits for a very particular event, like a cancer diagnosis or an accidental injury, giving you this vital financial cushion right when and where you need it the most.
Now, before we jump into all the different kinds of policies, it is so important that we clear something up. You're going to hear the terms limited risk and special risk, and they sound super similar, but they actually cover very, very different things.
This comparison really nails the difference. A limited risk policy, like that travel accident insurance you can grab at the airport, is for a common situation that, anyone could find themselves in. A special risk policy, that's for something way more unusual. Think of a famous actress insuring her legs for $1 million. For the rest of this explainer, we are focused 100% on limited risk policies, the tools that are available to all of us.
All right, now that we've got that sorted out, let's go on a quick tour of the most common limited insurance policies out there. We're going to look at the specific problem that each one is built to solve.
Just imagine the unimaginable for a moment, a sudden severe accident that results in the loss of a limb or your sight. Now, your health insurance, yeah, it'll cover the hospital bills, but what about the massive, long-term financial impact of an event that completely changes your life?
This is exactly what accidental death and dismemberment, or AD&D insurance, is for. It's really the purest form of accident insurance. An AD&D policy pays out a big lump sum cash benefit if you die in an accident or suffer a really catastrophic injury, like losing a limb, your sight, or your hearing.
So how do these payouts actually work? Well, there are two key terms to know. First, you've got the principal sum. That's the maximum amount, the full benefit paid out for an accidental death. Then there's the capital sum. This is for dismemberment, and it's paid as a percentage of that principal sum, depending on just how severe the injury is.
Let's look at a quick example to make it real. The most severe losses, like an accidental death or losing both of your feet, that would trigger 100% payout of that principal sum. But a less severe, though still totally life-changing injury, like losing one hand, that might pay out 50%. This structure gives you a financial benefit that's scaled to the severity of what happened.
Okay, let's switch gears to another scenario. Getting a critical illness diagnosis is emotionally and physically draining. We all know that. But it's also a huge financial burden. And I'm not just talking about copays here. I mean, lost wages, travel for experimental treatments, or honestly, just keeping the lights on at home.
There are two main policies that tackle this. First is a specified, or sometimes called a dread disease policy. This gives you fixed payments for specific treatments tied to that one illness. But then you have critical illness insurance, which is a bit broader. If you get diagnosed with a covered condition like a heart attack or a stroke, it pays a lump sum cash benefit directly to you. And that's the key. That money gives you total flexibility when you need it most.
Here's another really common gap. Your health insurance. It pays the hospital. But you know what it doesn't pay? Your mortgage or your car payment. If you're stuck in a hospital for a long time and you can't work, how do you keep your personal finances from falling apart?
This is the specific job of hospital indemnity insurance. It's simple. It pays you a set amount of cash for each day, week, or month that you're in the hospital. This income has nothing to do with your medical bills. It's designed to help you handle all your regular living expenses.
Okay, let's think about a different kind of financial promise. When you take out a big loan, both you and the bank are counting on your ability to pay it back. But what if a disability suddenly takes away your income? Suddenly, both you and your creditor are in a really tough spot. This is exactly where credit disability insurance steps in. The process is super straightforward. The borrower becomes disabled, the policy kicks in, and it starts making the loan payments directly to the lender. This is huge. It protects the borrower's credit score and makes sure the lender gets paid back.
And the list of these specialist tools just goes on. You've got things like blanket insurance for groups where people are always coming and going, like sports teams. There are plans specifically for prescription drugs, vision, and hearing. There's even short-term medical insurance to bridge those gaps when you're between jobs. See, each one is designed to plug a very specific hole.
So we have seen a whole bunch of these gap-filling policies. Before we wrap this up, let's just lock in the most important things you absolutely need to remember about all of them.
All right, here are the key takeaways. First, remember their one job is to fill specific gaps. Second, and this is so important, they are never, ever a substitute for a comprehensive major medical plan. Third, if it is not written down explicitly in that policy contract, it is not covered, period. And finally, by law, these policies have to include a notice to insured that says right on the front page that it's a limited benefit policy, so you know exactly what you're getting.
This quote from our source material really just sums it all up perfectly, doesn't it? The whole reason this entire category of insurance even exists is to step in and provide a financial backstop for those specific, often exceptional situations that your main health insurance just isn't built to handle.
And that leaves us with one final question for you to think about. Now that you know these specialized tools are out there, take a minute to think about your own life. What unexpected events could create real financial stress for you and your family? And are there any gaps in your safety net that might need filling? It's a question that's definitely worth asking. Thanks for joining me.